Hello, it's a frosty old Friday the 28th. I'm FX Plu and this is the market brief. So, the MPC are due to meet next week, and until recently the market had been pretty certain that we'd see a second rate hike in consecutive months. However, as wholesale gas prices continue to rise to the point that many household bills are expected to double when the government's price cap is adjusted in April, this second rate hike has been put in jeopardy. So they may sit on their hands for another month just to assess how things are developing. Boris has been on, awaiting his fate. When Sue Gray's report is released, he piped up yesterday, refusing to confirm that the rise in national insurance would indeed go ahead as planned in April. Meanwhile, though, Business Secretary Kwasi Kwarteng, he stuck to the script and confirmed to the press that there was no change to the government's plan to raise the basic rate of national insurance. Perhaps another case of classic Johnson leadership, where he does his own thing without having first discussed it with his cabinet colleagues. Keep an eye out for any fallout around that one. In the market, sterling has been driven lower against the dollar. We saw a low of around 133.55 yesterday, and we open around the 134 level this morning. And this is all in reaction to the positive Fed meeting and strong data for US GDP in Q4, because sterling euro remains pretty unchanged around 120.20. So yes, over in the US, after a positive outcome from the Fed meeting, GDP data was released yesterday, and that showed the US economy grew by 6.9% in Q4, much stronger than the 5.5% forecast and the 2.3% seen in Q3. The Fed will have had access to this data in advance, and it will have helped confirm their view that the economy is fit to withstand a complete withdrawal of support, immediately followed by the launch into a rate tightening cycle. Weekly jobless claims have been ticking higher over the past couple of weeks, but that dropped again yesterday, posting 260,000 new claims, down from 290,000 last week. And the dollar index broke through resistance at 96.20 and soared to a new 18-month high of 97.30. That was as euro dollar dropped off to a low of 111.30. And so that caps off another week. But before we head to the weekend, just a friendly reminder. Next Friday is the first Friday of February. And that means non-farm payrolls. And that means we're having the sweepstake. Toodaloo.
If you do not have a clue, then just tweet through and ask FX Blue.